reconciliation, right? We will understand the theory of bank account and the bank reconciliation statement. We'll understand the theory of bank account and the bank reconciliation statement. Hari. Now, Lamai, that you are running a business. This is the story of bank account, right? This is the session guide. That means the beginning. That means the theory. Now, you are running a business. Okay. Now you are here. You are running a business. This is you. Right? We'll say Mr. Kamal. Now, when Mr. Kamal is running the business and when the business is expanding, he can't manage all the cash by himself. Right? That means he needs a bank account. He requires a bank account. Therefore, this Mr. Kamal goes into a commercial or a Sampath or BOC bank and he opens a bank account on his name, right? This is the bank and he opens a account in this BOC bank. This is the theory. He opens an account in the BOC bank. Now, when he opens an account in the BOC bank, from his name, he has an account. That is what we call as bank account. That means in his books of account, right, he is maintaining a separate entry, a separate ledger account, which we call it as bank account, a separate prime entry book. In order to record whatever the transactions done through this bank account, he is maintaining in his business. Therefore, bank account from his business side, from the business point of view. Business side. Okay. That means if he receives the money, he records to the debit side. If he pay money, he records to the credit side. From the business side, he is recording everything. Did you all understand? Okay. Then there is another account for him in the bank. That means bank also maintains a statement. Bank also maintains a statement, which we call it as bank statement. That means from the bank side also they need to record the transactions, right? Because the bank is liable. It is not the bank's money. It is Mr. Kamal's money. Therefore, bank also maintains a statement. Okay, if Kamal suddenly comes and asks from the bank, where is my money? Bank will show, look at here, look at your statement. Therefore, bank also maintains a separate book for that, a separate entry for that, a separate account for that. We give the name called bank statement for that. That is what Lamai we call it as bank statement. This is how a bank statement look like. This is how the bank statement look like. Okay. All right. This is the bank statement. That means it is a proof from the bank side. It's a proof from the bank side. Did you all understand? It's a proof from the bank side. This is bank statement. In the bank statement, there is something called debit. So same like this. There is something called debit. There is something called credit. And here the balance. Okay. Now, Kamal started the bank account. Bank also maintains a statement. Because if Kamal suddenly comes and asks from the bank, where is my statement? Our bank will show, look at here, this is your statement. Therefore, this is from the bank side. Okay. This is from the business side. Now, Kamal also recording the transaction. Bank also recording. Kamal records, bank records. Kamal records, bank records. Okay, no? Right. Now, Kamal has a balance of 10,000 in his bank account. How we record that? We have to record like this. How we record the Kamal's 10,000? It is a asset value, a positive value. Therefore, BBF, balance brought forward, 10,000. Because it is his money. It's an asset. Bank account is an asset account. Okay. Now, for Kamal's bank account, for Kamal, this is an asset. For Kamal, this is an asset. But Lamai, for the bank, This is a liability. Why? Because bank is liable to pay for Kamal. Because bank is keeping the Kamal's money. Therefore, bank statements, it is a liability. For Kamal, it is an asset. Did you all understand? That means this BOC bank, if Kamal suddenly comes and asks the money, they are liable to pay Kamal. Therefore, if Kamal is having a balance of 10,000, how do we record that 10,000? In the bank statement also, there is a balance of 10,000. Okay, done. Right. Now, what the Kamal is doing? Kamal is depositing another 5,000. How do we record that? Capital. Kamal is depositing 5,000. Therefore, bank account debit. Kamal deposits 5,000. But for the bank side, Lamai, when Kamal deposit 5,000 in the BOC bank, in their statement, it is a liability. Because BOC bank is supposed to pay when Kamal asks the money. Therefore, for Kamal, it's an asset because it's the Kamal's money. But from the bank side, when they are recording in their bank statement, for the bank side, it is a liability, Lamai. Therefore, when the liability increases, what is the entry? It is credit. Therefore, how the bank records this transaction? Bank records like this. Deposit, which is capital. Bank record this in the credit side. Now, you have to understand one important theory. If you record it in the debit side of your bank account, bank will record it in the credit side. Did you all understand? Because it is an asset for you, but it's a liability for the bank. Why? Because this 5,000 is not the bank's money. They are liable. If Kamal comes and asks from the bank, give me my 5,000, then the bank has to pay him. Therefore, my 5,000 is credit. Did you all understand? Hurry. Another one. Now Kamal is paying 2,000 for a rent from his bank account. He is paying 2,000. How do we record that? Bank account credit, because you are paying money for the rent 2,000. Now if bank account credit, okay, bank statement debit, because we do the opposite. Therefore, bank statement debit 2,000. This is rent. Okay. Now, how do you check the balance? Now, 10,000 is already there. With this 10,000, we have to add the 5,000 because it is credit. Credit side we add, debit we minus. Therefore, 10 plus 5, 15,000. 15, debit means minus, right? 15 minus 2,000, 13,000. Now, 13,000 is the balance. Okay. Another transaction. Now, Kamal is paying for a creditor. Therefore, creditor 1,000. Okay, creditor 1,000. Bank account credit. Bank statement, we do opposite, right? Therefore, debit. So, creditor, debit 1,000. From 13,000, if we deduct 1,000, what is the amount? The balance is 12,000. Okay. Therefore, now did you all understand? Whatever the bank records, whatever the things that the bank records, right? Bank statement also records that. Did you all understand? If the bank records something, quickly the bank statement also records that. If bank records something in the debit side, bank statement record it in the credit side. If bank records something in their credit side, bank statement record it in their debit side. They do it oppositely. But anyways, they are recording this. Now tell me, Lama, up to this, did you all understand the theory? Not difficult, right? Up to this, it is 100% clear. Is it okay? Up to this, is it okay? Tell me, Lama. Quickly give me a feedback. Am I 100% clear up to this? Clear. Very good. What about others? Everyone give me feedback. Because when you give me a feedback only, right, I can understand, right? This much of students understood this concept. Clear. Very good. 100% clear. Perfect. All right. Now we will jump into another important incident. Now, Kamal gets a check from his friend Bimal. Kamal gets a check from his friend Bimal. Now, when the Kamal receives the check, okay, 13,000. All right, okay, I'll explain that. If something is in the credit side, Afra, you have to add that. If something is in the debit side, you have to deduct. So with this 10,000, you add the 5,000, therefore 15, because credit. With this 15, you minus 2, 13. From this 13, you minus 1,000, 12. Did you understand? That okay? That is how that you record. Very good. Excellent. Huh? All right. Now Kamal receives a check from Bimal. How you record that? Bimal, 11,000, for example, 11,000. Now Kamal receives a check from Bimal, but Kamal forgot to take this check to the bank. Right? Kamal received this 11,000 check, but Kamal forgot to take this check to the bank. So this type of checks, where you are recording it in your bank account, but bank did not record from their side. You are recording it to your bank account, but bank did not record it from their side. This type of transaction, we give a name called unrealized check. Deposited but unrealized. This is deposited, but bank did not realize that. Bank did not record that. For this type of check, we give the name called unrealized check. Unrealized check. Because this 11,000 not recorded in the bank statement. Correct. Now another situation, another incident. Okay. Now look at here. Now Kamal is paying for another person called PL. Kamal is paying for another person called PL. Paying in credit for PL. Kamal is paying 15,000. Now Kamal pays the check for PL, right? But PL did not go to the bank yet. That means in the bank account it is recorded. In the bank statement it is not recorded. In the bank account it is recorded. In the bank statement it is not recorded. This is what you call as unpresented. You issued that. You credited. But bank statement did not record that. We call this as unpresented check, Lamai. Unpresented check. Now, what is the difference? You are receiving, but if the bank did not record, unrealized. You are paying, but the bank did not record yet, unpresented. Did you all understand the difference? Unrealized, unpresented. Unrealized, unpresented. Okay, I'll write down unpresented here. Unrealized, unpresented. Unrealized, unpresented. This is unpresented check. Unpresented check. Now, did you understand the difference? Unrealized, unpresented. Unrealized, unpresented. Now, people who understood the difference of unrealized, unpresented, raise your hands. So it is easy. Very good. What about others? So every time if I ask a question, please give me feedback, sir. Now you all are like, I understood everything, but when I give a paper only that you don't write it properly. Alright. Therefore, give me feedback. If you did not understand, you tell me in which place that you did not understand. Okay. Right. Okay. Bimal unrealized, PL unpresented. Now that is one situation. Then, now this is bank is recording, bank account you are recording from your business side, but from the bank side they did not record. But there are some other transactions, Lamai. Bank is recording from their side. Bank is recording. But we are forgetting to record that. That means we did not record that. Bank side, they are doing their duty. They record it in their bank statement, but we did not record it in our bank account. Did you all understand? Unrealized mean, Aisha, that you are receiving a check. You are receiving 11,000 from Bimal, which means bank account debit. But Bimal did not take, you did not take that check to the bank. That means this 11,000 you are receiving, but bank did not record it as received. Okay, unpresented means you are paying, but bank did not record it as a payment. Okay, Aisha, did you understand? Alright. Now that is one incident. There is another situation. From the bank side, they are doing their duty. That means they are recording. For example, there is something called bank charges. That means bank is charging an amount every year. Bank charges will say 500 rupees. Bank charges mean, right, it is a payment. Therefore, debit 500. Bank charges. Now 12,000 minus 500. What is the answer? Tell me. What is the balance now? What is the balance now? Everyone must give me feedback. So what is the balance now? What is the balance? 12,000. Then bank charge. After that, what is the balance? Give me the balance, Lamai. A simple question. Debit mean you have to deduct. From 12,000, when you deduct 500, what is the answer? Quickly put the answer in the chat box. Rashida, correct. Very good. Amira, correct. Excellent. It is, Lamai, 11,500. It is, yes, Afra, correct. 11,500. Therefore, now did you understand? Bank charges, bank side they have recorded. From the bank side they have recorded. But the business did not record it yet. Business did not record this bank charges to the credit side yet. And there is something called standing order. Bank is paying. For example, you are paying insurance and you have ordered the bank to pay it on 10th of every month. So bank is paying that, we'll say 5,000. But you did not record it in your bank account. Okay. Therefore, 11,500 minus 5,000, 6,500 is the new balance. And there is something called direct remittance. That means directly you are receiving money from the debtors. You are directly receiving money from debtors, which is credit. You are receiving 7,000. Now, if you receive 7,000, credit plus, right? So 6,500 plus 7,000, the new balance is, if you add these two, 13,500. Now your balance is 13,500. But look at here, these three, bank charges, standing order, direct remittance, not recorded in these three, not recorded in bank account. Recorded in the bank statement, but not recorded in the bank account. Now, there are some mistakes. This 11,000 and 15,000 unrealized, unpresented, it is recorded in the bank account, but not recorded in the bank statement. One issue. The second issue is this bank charge, standing order, direct remittance, recorded in the bank statement, but not recorded in the bank account. Did you all understand? If they have done a mistake like that, tell me, will the balance of both these bank account and the bank statement, will it be equal if they have done a mistake? Tell me, if they have done a mistake like this, will the balance will be equal at the end of the month? Right? Quickly put an answer in the feedback chat box. Will it be equal or not? I'm asking a simple question. If they have done mistakes like this, will it be equal or not? Don't be lazy to put a feedback in the chat box. I don't know what you all are doing, right? Coming to the class, but I don't know whether you all are in the screen or not. Therefore, parents are there, people who are there in the home, that you all have to look at what's happening. If you all did not give answer, I don't know what to do. Hurry. Right. Therefore, you all have to understand, Lamai, if the balance is not equal at the end of the month, they have done mistakes. Now, these are the mistakes. Now, if you calculate the balance of this. 10,000 plus 5,000, 15,000. 15 plus 11, 26,000. Okay, 26,000. Now, from this 26,000, if you deduct this, you have to check the balance carried down. 15, 16, 18. If you deduct 18,000 from 26,000, you get the 8,000 as the balance. Did you all understand? Now, here the balance is 8,000. But here the balance is 13,500. Why? Because there are mistakes. What are the mistakes? Number one mistake, unrealized check. Number two mistake, unpresented check. Number three mistakes are these: bank charge, standing order, direct remittance. Now tell me, Lamai, did you all understand the theory? I taught the theory because there are a lot of people who miss the theory in grade 10. That is the reason. Okay. That you all did not do the things properly. Oh, by this time that you all have forgot about the theory. So that is why that I am teaching the theory. At least by this that you all have to understand. Did you all understand? Because even 5 marks is important. Right? Now tell me, Lamai, did you all understand this theory completely? Yes, very good. What about others? Everyone give me feedbacks. Are everyone give me feedback. Aisha, did you understand? Then Aman, right? Amira, Hadik, Mujahida, did you understand? And then Shumair, did you understand? Umair. All right. Okay. Now take out your writing book. Put the heading bank and the bank reconciliation statement. Good. Write down the theory and write down this. Then I'll teach you how to prepare the bank reconciliation statement. In order to correct this, what do we do? That is what you call as bank reconciliation statement. Right? This is not just a paper class. We are discussing the theory also. Right? Write down this. Not writing down this, put down. Right. Okay. Now we understood the mistakes, right? Now what are the mistake? Mistake number one is you recorded in your bank account, but it is not recorded in the bank statement. Number one mistake, unrealized check. Number two mistake, recorded it in your bank account, unpresented check, but not recorded in the bank side, bank statement. Now those are the two mistakes done by the bank. Bank did not record it. Number three, there are some transactions like bank charges, standing order, direct remittance. Bank recorded it. Bank did their duty, but you did not record it. That means in your bank account, you did not record. Therefore, there are two mistakes done by the bank and there are three mistakes done by the your business. That means in your bank account. Now what you do? In order to correct this mistake only, what do you mean by reconciliation? That you correct. You identify reasons for the difference. Now here the bank account balance is 8,000, right? Bank statement balance is 13,500. Now you correct it. How to correct it? Now we will check how to correct it. To correct this, first we have to start up with the adjusted bank account. We have to create another bank account. We have to correct our mistake. Therefore, number one, adjusted bank account. Write down adjusted bank account. Adjusted bank account. Number one. Then what you do, Lamai? In order to correct the mistake of the bank, you are drawing another statement. You're opening up another statement, which is bank reconciliation statement. Draw the bank reconciliation statement. Bank reconciliation statement. Bank reconciliation statement. One is adjusted bank account. The other one is bank reconciliation statement. Bank reconciliation statement. So how you start the bank reconciliation statement? Number one that you write down, balance as per adjusted bank account. Adjusted bank account plus unpresented check. Minus unrealized check. Finally, balance as per bank statement. Balance as per bank statement. Balance as per adjusted bank account plus unpresented minus unrealized, balance as per bank statement. This is the answer. Now write down this also. Then we will do the question. So write down this and put down. Then we will do the question. Okay. Now go into the question, our problem. Now go to the problem and first you have to get the balance of the bank account. How much is the balance of the bank account? 8,000. Now you write down that 8,000. Now you write down that 8,000. So then in the initial balance, if there are some recorded transaction, Rashida, the transaction recorded in the bank statement. If it is recorded in the bank account, we don't correct it. We don't record it in the reconciliation. Okay. Transaction recorded in the statement, but not recorded in the account, we do in the reconciliation. Am I clear? If recorded in the both side, no problem. Okay. Right. Adjusted bank account. Now we have to get the balance of the adjusted bank account. What is the balance? Balance brought forward. Now go to the problem, issue. What is the balance? 8,000. Write down 8,000. Write down 8,000. Okay. All right. Now look at here. Bank charges, standing order, direct remittance. Those are recorded in the bank statement, but not recorded in the bank account. So in the adjusted one, we have to record these three. Bank charges 500, standing order 5,000. Bank charges 500, bank charge 500, standing order 5,000. We record it in the credit side. Now look at here, direct remittance 7,000 we received, bank recorded, we did not record. Now we have to record that. Direct remittance 7,000. Direct remittance 7,000. Now these three which were not recorded, we are recording in the adjusted bank account. Okay, right, record this. Write down this. Then we have to get the balance, Lamai. Shall we get the balance? Hurry. 8,000 plus 7,000. 15. Put the 15 here also. Okay, 15. Right? Then what is the balance carried down? If you deduct the 5,500 from 15,000, the balance carried down is 9,500. This is the balance brought forward also. Okay, 9,500. This 9,500, where do you record? You write down it here. Balance as per adjusted bank account. What is the balance? 9,500. 9,500. Write down this. $9,500. Okay. Now it is easy. Now there are two checks, right? One is unrealized, 11,000. Unpresented, 15,000. Unpresented 15 you have to add. Unrealized 11 you have to deduct. So just remember like plus unpresented minus unrealized. So remember it like a song. Plus unpresented minus unrealized. Plus unpresented minus unrealized. Plus unpresented 15. Now how much is 15,000 plus 9,500? Which is 24,500. Now from this 24,500 you have to deduct 11,000. Why? Unrealized minus. 24,500 minus 11,000, 13,500. This is the balance as per bank's statement. Now record this. And after recording, tell me, Lamai, is this clear? This is the theory. This is how it practically works. Okay, up until today, if you all did not learn how this practically works, right, understand this is how it practically works. There is nothing rocket science here. In accounting, there can be only things which is practical. There can be nothing which is impractical. Did you all understand? Everything that we record in the accounts is the practical things that we do. This is how that we record. Now tell me, Lamai, is this clear? This is how you do a bank reconciliation statement. You correct the statements. You correct the statements. Is this clear, Laman? Crystal clear?